pairs that continue to persist on my radar. And you know that if you've been keeping up with the Forex Fishbowl morning chat notes, we've been pushing these pairs through February, and we're going to continue to push these pairs into March in terms of our daily notes. So if you've been keeping up with that, you know where we're at. In terms of what we're going to be looking at for price range, I'll keep that on a separate video, and we'll get into the different price range expectations. But for right now, I'm going to continue to look at opportunities in the dollar-yen. I'm going to continue to look for opportunities to engage the uptrend. But the question is, which time frame? And that brings me to our chat we're going to have on March the 5th at 8 p.m. Now, at 8 p.m., I'm going to get into a lot of the details of my trend trading, as well as kind of what I consider my secret weapon, which is understanding what is a correction and how much price could move based upon the pip movement ranges. You know, for example, the dollar Canada, which we traded in February on that parity play, for those of you that were with me in the chat room. So what happens after we play that parity play? We've got a significant bounce that's occurred since we had played parity. So I'm not going to abandon the pair. What the point is now is to understand what's driving the loonie lower, the Canadian dollar, and to start to understand what's maybe going to be a contributing factor to, one, the dollar's value staying elevated, or two, what happens if the greenback starts to sell off? What happens to this trend? And could the weakness in the U.S. dollar outpace the weakness in the Canadian dollar? And my expectation is no. So what I want to do is start to set up an opportunity to take advantage of a pullback. And my challenge right now is, if I'm going to look at a pullback here, I could put in a Fibonacci, something like this, but I'm not crazy about this Fibonacci. I can see there's a lot of play at the 23.6 and 38.2. That is helpful. However, I want to back up these two support levels with a better understanding of what's going on in terms of the not only the hourly pip movement ranges, but also the movement per day, because this is, of course, a daily time frame. So I'll be able to gauge much better what kind of movement we could get, and whether or not I could set up an aggressive buy from, say, the 1.205, 1.0, 1.0205 area. So specifically where we're going to get in terms of movement to the downside if we continue to see dollar weakness and or any kind of near-term Canadian dollar strength. All right, so all that is really predicated on the fact that I've got this uptrend, which brings me back to what we're going to be talking about on March 5th. How do I choose the pairs that I'm going to be aggressively trend following and more conservatively trend following? How do I understand what kind of pip movement range I can expect on the correction versus whether or not I should sit on the sidelines because it's still uncertain? So those are all points we're going to get much more into. For now, I'll tell you, tomorrow, getting into Monday, I'll be definitely looking at opportunities to perhaps near term get aggressive on the 4-hour. But again, it's gonna really be determined by, one, the economic calendar. So we don't want to lose sight of what kind of data we could be getting come next week. And then I want to balance that out with the average to the high range of what we could see, and whether or not that puts any of the swing trades on the dollar Canada within striking distance. Another pair like this that we're going to keep an eye on going into next week is going to be the cable. So looking at the pound sterling against the U.S. dollar, of course I'm going to be very interested in what it is that the U.S. dollar is trying to tell me. But ultimately, and I know this is kind of an ugly chart, I was playing around with some Fibo overlaps here during the morning chat, but one of the things that I want to see is what to the downside is my next target. How much of that is going to be powered by more pound sterling weakness? And I got to tell you all, the pound sterling is the gift that keeps on giving this month. If we had the yen helping us out through December, January, and most of February, that was the gift that kind of gave for about 90 days. That isn't nearly as bearish as this pound sterling. So how much of this movement lower is going to slow down if we get dollar going maybe a little neutral or even pulling back? But if we persist with the pound sterling weakness, I'm going to certainly see this downtrend continue lower, and that opens up opportunities to set up the 240, which we did in the chat room. We talked about how to get a little bit more aggressive on the 240. We set up a nice short in front of this sell-off here, and what we want to do is not necessarily depend on these kind of moves. In fact, we never do depend on these. These are really just gifts. But what is going to happen in terms of the trend, and how aggressive will I get, assuming that I may not get these kinds of moves anymore? We never assumed them to begin with. The downgrade was a gift, but can I go ahead and position myself somewhere in the 5100 to 5120 area? I'm going to definitely look for that in the near term, but once again, we have to refer back to the auto chartist, look at the price movement ranges, and see whether or not, one, we're in striking distance, or two, if we're too close. How many of you have tried to swing trade something and been entirely too close and got run over? Those are aggressive entries. And unless you are absolutely aware that it's an aggressive entry, you're not psychologically prepared for potentially being run over, and you're not ready for when that conservative entry can come and position your average in a better spot. We're going to be talking about all that on Tuesday at 8 p.m., and we're going to definitely be getting into more of this in tomorrow's chat. I'll see you then.